Well, thank you for joining me on your lunch. So I'm going to do a general presentation on the National Flood Insurance Program and the role that DW has with the national program. The program is a FEMA program, and the program started a long time ago. In 1968, the National Flood Insurance Act of 1968 was authorized the NFIP to provide federally backed flood insurance, allow for flood hazard identification, and floodplain management guidance. And then 5 years later, the Flood Disaster Protection Act of 1973 strengthened this by making flood insurance coverage mandatory for communities that are participating in the NFIP and for homeowners that have a federally backed mortgage. The NFIP is administered now by the Federal Emergency Management Agency, or FEMA. And also note that's not on this slide is that the NFIP is a self-supporting and is not funded by taxpayer dollars. Today in California, there's 527 participating communities in the NFIP, only 4 non-participating communities. These communities all have some type of special flood hazard area, and so that means 99.25% of the communities in California that are eligible to participate do participate. Roughly 296,000 policies, premiums totals about $215 million, covering $83 billion in property. So communities don't have to join, but by joining, they make the cheaper flood insurance available to all in their community. So FEMA's role in the NFIP is to administer the NFIP. They develop and maintain the flood insurance studies and flood insurance rate maps. They establish standards for all development in the special flood hazard areas, or SFHA. They publish rules in the Code of Federal Regulations, Title 44, and they also provide the affordable flood insurance. DWR's role in this is we provide technical assistance to communities and state agencies. We perform NFIP community assistance visits, or CAVs, which are inspections of the special flood hazard area for development to make sure they're NFIP compliant. We evaluate community floodplain ordinances and regulations. We also meet with community staff to discuss findings and offer technical assistance for any findings in these CAVs. Then we produce a community compliance report for the community and to FEMA, which is sent to the community CEO or mayor. Then we also provide training and workshops throughout California. We provide NFIP training covering workshops covering basic NFIP roles for a community, elevation certificates, substantial damage, substantial improvements, and approximate A zones. These are all topics which are covered under the National Flood Insurance Program. The local community's role is to adopt and enforce floodplain management ordinance, which is compliant with Title 44 Code of Federal Regulations. So this is how the NFIP is enforced. It's enforced at the community level. So FEMA writes the rules, but the community writes their own ordinance, which is compliant to the Title 44, and they are responsible for enforcing the FEMA measures. Local community also ensures that all development, including substantial improvements, complies with the floodplain management ordinance. They coordinate with the state, FEMA, and the Corps of Engineers and other local entities to maintain and update their flood insurance rate maps. Tools that are used by the NFIP. You have the flood insurance study, which has the hydrology and hydraulic study for a community. The FIRM, or flood insurance rate map, which is the product of the study. And the elevation certificate, which is used to verify a structure's elevation relative to a base flood elevation, or BFE. Now we'll cover these in a little bit more detail in the slides that are following. So the flood insurance study. The flood insurance study, what it includes baseline information, assumptions that were used in the study, the data that was used for input, methods used for calculations, stream cross-section data, base flood elevations, or BFEs, pond water levels, a description of the area, topography, climate, etc., anything that would influence the hydrology, the date of the community's original FIRM, which is important to when the community joined the National Flood Insurance Program, and also if there are other studies used by reference in the report to develop the report and the flood insurance rate maps. The flood insurance rate map. This is probably the most recognizable output of the flood insurance study. The flood insurance rate map is used for a specific study, for a specific community. As noted here, this one is for the city of Elk Grove. Also notice the effective date. And also in the map number, there is a letter following the map number. That is a revision letter. So A would be the first, B second revision, and so on down the line. So the flood insurance rate map, it shows special flood hazard areas, and this is what's used to determine if a structure is in or out of a flood hazard area. It's used horizontally. If any part of the structure is touching, it's considered in, but the map is the regulatory product used to determine this. It shows A zones and V zones with different suffixes after those, but A zones and V zones are the special flood hazard areas which have the requirements of the NFIP attached to them. So different zones that are shown on the map. There's A's, AO's, AE's, A99s, which are in the Sacramento area. V and VE zones are coastal A zones. D and X zones are shown. Zones D and X are not considered special flood hazard areas. In other words, they're shown on the map, identified on the map, but they don't have building restrictions or NFIP requirements need to be met in those areas. Whereas all A and V zones are special flood hazard areas. Another important factor in determining flood insurance is the structure pre-firm or post-firm. If the structure was constructed before the date of the original firm, which is the date the community joined the NFIP, it is called a pre-firm structure. And of course, if the structure was constructed after the date of the original firm, it is consequently a post-firm structure. So far, we've covered many acronyms as you've seen so far. And so we have NFIP, National Flood Insurance Program, FEMA, Federal Emergency Management Agency, FIS is your flood insurance study, FIRM, flood insurance rate map, EC is elevation certificate, pre-firm, post-firm, special flood hazard area, SFHA, BFE is base flood elevation, and the CAV is community assistance visit, and a CAC, which I didn't cover, is a community assistance contact. This is used just to touch base with the community, usually with a phone call, could be a small local inspection, but it's done so the community knows that we are here, that FEMA is here, and we can touch base and review anything that's coming up if they have any questions. But these terms we'll be referring to throughout the presentation. So the firm. The firm is used to determine if a structure is in the SFHA. And so why is this important? Because if a structure is determined to be in a SFHA, it will be required to have flood insurance if it has a federally backed mortgage. If a structure is in a SFHA, it will be subject to the NFIP structural requirements for building and construction in a special flood hazard area. So by this diagram, which of these structures is in a special flood hazard area? We have three structures that are in the red. The blue is the special flood hazard area. The structure on the right, is it on the screen's right?
Yes.
Okay, the structure on the right is not touching any of the special flood hazard area, even though the property is included. The structure is not considered in the special flood hazard area and would not require flood insurance. The structure in the middle is required. The structure on the left, even though it's only partially within the flood hazard area, it is treated as if the whole structure is in the flood hazard area and therefore must meet all the requirements of that zone and also requires flood insurance. So now I've determined I'm in a special flood hazard area, so now what happens? If a structure is determined to be in a special flood hazard area, if it's a post-firm structure, it will be subject to the NFIP structural requirements for building, constructing a special flood hazard area. So there are requirements for building, and then there's the insurance requirement that is required. So the NFIP has special requirements for structures, elevation, location, to meet that they have to be met for the communities that participate in the NFIP. If it's a pre-firm structure, it'll still require flood insurance because it's in a special flood hazard area, and if it's purchased with a federally backed mortgage, All structures, if they have a federally backed mortgage, require to have flood insurance. The pre-firm structures are treated a little bit differently because the structure is already there. It was there before the firm map was in place, and therefore they have a different rate table. So NFIP requirements for new structures, the NFIP has minimum requirements that communities must adhere to in order to maintain their participation in the NFIP. Communities have their own local floodplain ordinance, but again, this meets the federal requirements, which have provisions that meet or exceed the minimum NFIP requirements. A community can allow variances, but they're discouraged and used only if you have to, because what they do is you're relaxing requirements and you are putting people at risk by giving them a variance. And also the insurance, for example, from insurance. For example, excuse me, if your requirement is to elevate a building to base flood elevation or 1 foot above base flood elevation, and someone requests a variance to build below that elevation, if you allow that variance to happen, the construction will proceed because you've allowed it through a variance, but the insurance will still be rated as with the below base flood elevation structure, and therefore very, very high. So you've allowed them to build, but now you've required them to pay for it. It may not be practical. The elevation requirements. The minimum for FEMA is at or above the BFE. As of January 2007, California Residential Code, the requirement is BFE plus 1 foot. There are venting requirements. So the vents that you see around the foundations of many structures, many homes have those vents. They're not just for air, they serve a flood purpose in a flood zone. Have a minimum of 2 vents on different walls. This is to allow flow through of water. Vents may be a maximum of 1 feet above the adjacent grade, that's interior or exterior grade of the building. The area of the vent must be equal to at least 1 inch of square vent to 1 square foot of your floor. The 1 foot is important because it's to minimize the water pressure, and they want to allow a maximum of 1 foot of water pressure on the wall. Non-residential structures do not have to be elevated. They may be dry flood proofs. In other words, impervious to water. A separate requirement kind of falls in between, and insurance is substantial damage, substantial improvement. So if a structure in a special flood hazard area is damaged or improved more than 50% of its market value, it must now be rebuilt to meet the current NFIP requirements. So if I have an old structure, it could be a flood, could be fire, could be an earthquake to more than 50% of its market value, and I'm going to rebuild, the structure must now meet the new requirements of NFIP, meaning I may have to raise my entire structure now. If I'm doing improvements, a remodel, and the remodel is more than 50% of the structure, I may have to raise my whole structure to meet the requirements. If my improvement is not structurally connected, meaning it's only connected by a door, it doesn't have a common wall, a structural wall, I don't need to elevate the improvement. Now the insurance side of the NFIP. Assuming that each of these houses on the following slide has a federally backed mortgage, which one needs to purchase flood insurance? And who can or should buy flood insurance? So here we have 4 structures. The first structure on the left, like we said earlier, is partially, looking at the map, is partially touching the flood zone. Therefore, it needs flood insurance. It's built on the ground. The second structure from the left, again, is on the ground, completely within the special flood hazard area, also needs flood insurance. The third structure, so the structure that's been elevated, it's in California, we're a foot above the base flood elevation. It still needs flood insurance because horizontally it is shown within the flood hazard area. Elevating the structure affects the premium and how much premium they will pay, but it's still, the requirement for flood insurance still stands. So the only structure which does not require flood insurance would be the one on the right. So why is elevation important? It's important in the premiums that you will pay if you're in a flood zone. So here is an example. This is just a straight premium cost, doesn't account additional fees, assessments that may be there. If you meet the minimum requirement of FEMA, which is at base flood elevation, at BFE, your premium would be, for example, the green, $1,700 a year. If you elevate to meet the California requirement now, so you're 1 foot above, your insurance is about $846, or about half, just for raising 1 more foot. If you raise 2 more feet, 2 feet above base flood elevation, your premium is about a third of what would be at BFE, or the minimum requirement. However, if you were, let's say you would allow that variance I talked about earlier, and you were a foot below BFE, your insurance would be $4,000, about 2.5 times if you met the requirement at BFE. So that's where elevation is very important. The third item, the third tool NFIP uses, the study, the maps, and the elevation certificate. This is a form that FEMA uses, or a homeowner can use to verify the elevation of their home, of the lowest floor of their home. What it does, it determines the vertical relationship of the structure to the base flood elevation, and it's used to determine the premium, like we saw in the previous slides. By the community, I stress this because I get calls practically every day of people asking for if the state in fact has their elevation certificate. The state is not the keeper of these, but they are kept on file by the community. If the community is a CRS community, which is something we'll get to in a minute, those are kept on file for basically perpetuity, forever. There is no statute of limitations on how long these must be kept on record. Past ECs are still valid because ECs are updated. The form is updated roughly every 3 years. If there has been no map change, the information is still accurate, the EC is still valid. Pre-firm structures are not required to have an EC. That is because the structure was built before the maps were created. They could help, however, if a owner of a pre-firm structure wishes to get an elevation certificate and that structure is shown to be actually on a raised foundation, which is common construction at the time, it may be, the lowest floor may be above the base flood elevation, and therefore the premiums may be lower. So there is an advantage for a pre-firm structure to have an elevation certificate. And so if you have flood insurance, ways to reduce your flood insurance costs. The easiest, I guess, is a relative term, would be to elevate the structure. If you're constructing, if you know what your base flood elevation is, you should just elevate to as high as possible or as high as practical. The reason being, if you're a foot above the requirement to 2 feet above the requirement, it's much cheaper. A second way would be to do a map change, which we'll cover later. But if you create a fill or an island, let's say essentially an island, and put your house there of raised ground, you can get a letter of map change to change the map, which shows the structure to be outside of the special flood hazard area and therefore not subject to the. Communities as a whole can participate in what's called the Community Rating System Program. The Community Rating Systems Program, or CRS, encourages communities to exceed the minimum flood standards set by FEMA. And by exceeding the standards, FEMA rewards points for what they're called activities. It reduces flood loss, and so it avoids damages, it reduces risk, it reduces the risk to people. It strengthens, supports the insurance aspects of the NFIP, and it fosters good floodplain management. So, for example, one activity that could be done is increasing the open space in a special flood hazard area. What this does is it discourages building in the special flood hazard area. So by increasing your green space, you receive points. And as you receive points and accumulate points towards a rating, you'd fall into one of these classes. Each class upgrade is a 5% increase in the savings you'd receive on your premium. This area. This is probably the only vehicle that FEMA currently has as a way of lowering your flood insurance premiums that FEMA has you can work with. So CRS in California, 16% of the state's NFIP communities, of the 527 communities, are participating in CRS. It doesn't sound like a lot, but those 16% of the communities have 67% of the state's policies are within those 16%. The concentrations, as you would think, are in the Bay Area and Southern California. Another important aspect is CRS is not competitive. So if a community can help another community share what they know, share their knowledge to gain points and help them reduce their costs, there's a benefit. And so the user groups there's one in Sacramento which is very helpful. So if you can contact my office, or we can put you in contact with the users group. Let me back up one slide. California is very active. The city of Roseville, California is the only Class 1 community in the nation. So that means everybody in the city of Roseville and the special flood hazards area that has an insurance policy is saving 45% on their premiums. Sacramento, County of Sacramento is a Class 2 community, which is also very rare, and everybody in the County of Sacramento, the incorporated area, receives 40% discount on their flood insurance premiums. So the benefits is that the money stays in the community. Sacramento's, at the time of this presentation, they were saving $5.6 million per year. It's actually increased because at this time Sacramento was a Class 3 and saving 35%. Now they're saving 40% on the premiums for everybody. Roseville saves about $831,000 per year. So even though they're Class 1, the reason this is less is because, like what Roseville likes to do is, for one, they increase the green space so that ideally FEMA would prefer nobody would build a special flood hazard area. And so what Roseville is doing is minimizing the construction in the special flood hazard area. So therefore you have less policies, but they're still saving $831,000 a year. So earlier I mentioned map changes. And there are reasons why you would want to change a map. Well, of course, one would be to get out of the insurance requirement, but another is if the map is incorrect. If the map shows you to be within a special flood hazard area and you know you're not a special flood hazard area, you can have that map changed. Ground that should be shown on the firm. If I've done some filling or cutting or grading on my property, or as a community, a development has come in that has changed the ground that should be shown on the firm, that should be reported back to FEMA. Or if I'm completing a project that's going to change the ground, the map is incorrect in the location where I intend to build my project. I may need to do a map change so I can go ahead with my project if the community does not allow me to build in a special flood hazard area. So there are various types of map changes that can occur. All these fall under the acronym of LOMC, Letter of Map Change. There's a Letter of Map Amendment, or LOMA, and 2 conditional letter of map amendments, and 1 conditional letter of map revision. Let me back up a little bit. Letter of map amendment is essentially, like I was saying, if the map is incorrect and you want to make a correction to the map, and these are actually no charge to you. If the map shows you're in a special flood hazard area, but you're on a high area and it's incorrect, you can have your area surveyed, that information sent to FEMA, and if they agree, you'll receive a letter which says you are not in fact to the requirements of flood insurance. A letter of map revision is the example I mentioned earlier of bringing in fill or bringing in material, then constructing your house on top of that mound. Essentially, you created an island, a high spot, and so the map, which shows the physical ground, would now reflect that high spot, and it would essentially be shown as not being in the special flood hazard area. Typically, you would get the letter, and it wouldn't be shown on the map because showing the area of one structure would not show up on the map because of the scale of the maps. But your letter of map revision is in fact showing that you do not meet requirements and no longer need flood insurance. Conditional letter of map amendment, it would be if I'm doing a project and I know my project is going to be affected the floodplain, if it's going to affect the floodplain, what you should do, and what we recommend, is doing a conditional letter of map amendment, sending it to FEMA, and saying this is what the project is going to do, and this is how it's going to affect it. And FEMA will send back comments saying, yes, we agree, and this is what's going to happen. You do your project, and then after you do your project, meaning you have changed the map now, and then the map, consequently the map will be changed and show the changes that you have made. So now we're back to our figure again. So now we have a firm. Now what we've shown is the two properties on the left, they have filled those properties. And so now they're elevated. And so the firm map has been changed and shows those two properties not to be in the special flood hazard area. So now therefore they're no longer subject to the flood insurance. The one property, the one structure which is in the blue, even though it's elevated, because it's elevated on, still shown within horizontally within the floodplain, is still subject to the flood insurance requirements. But the two on the left no longer are, because the ground which they sit on is elevated and no longer is higher than the base, the BFE. So we've added more new terms here. Substantial damage, substantial improvement, which is the 50% threshold. EC, elevation certificate, is a very common term. CRS, community rating systems. LOMAX, or letter of map changes. LOMARs, letter of map revisions. LOMAR F is a letter of map revision due to fill. CLOMA and CLOMAR is conditional letter of map amendment, and a conditional letter of map revision. So, other things that we do at the state, which help to assist the National Flood Insurance Program, is because the California Building has come out, we are becoming more knowledgeable regarding the California Building Code and California Residential Code. Changes came in 2017 that may cause some confusion. What we mean by that is, before this, there were not very many flood provisions within the building code. And when the 2017 came out, which is effective in 2016, 16 code came out effective in 2017, pardon me. There are many flood provisions now which duplicate or exceed the FEMA minimum requirements, which means that now the building official has responsibility towards flood provisions, and therefore we at the state who work with the National Flood Insurance Program have to become more knowledgeable so we can refer building officials and refer floodplain officials to the building code. We provide some grant assistance for flood mitigation program, hazard mitigation grants, or the Hazard Mitigation Grant Program, HMGP grants, or pre-disaster mitigation grants. We conduct certified floodplain manager exam workshops and exams. Certified floodplain manager designation is a designation sponsored by Association of State Floodplain Managers, or ASFPM. And it's a certification which lets us know that we are working with someone who is qualified and has expertise in the area of floodplain management. So it's very helpful to us. We respond to technical assistance requests for all things NFIP, insurance, mapping, building requirements. Used to be Executive Order 13690, which has since been repealed, but the federal executive order which covers floodplain is still in existence, Executive Order 11988. And I believe our final slide is yet more terms. So the final terms we've added are CBC, California Building Code, CRC, California Residential Code, FMA, which is Floodplain Management Association, which is the California branch of the Association of State Floodplain Managers, HMGP, which are grants, Hazard Mitigation Grants Program, PDMs are Pre-Disaster Mitigation Grants, and CFM, which is your Certified Floodplain Manager. Brief, I know it was hasty overview of the National Flood Insurance Program, FEMA's role, and what DWR's role is. Kind of give you a flavor of what we do here at DWR. If you need have questions or want more in-depth, in-depth information, please feel free to contact us and open to any questions.